All right, it took a loss. And yep, here comes the risk to reward police once again. People love to talk about our risk to reward. Some people love it, some people hate it. But for those of you who've been here long enough, know how we recover from it. This is episode 2 of the $1,000 account trading series. Even after a couple red days, a couple withdrawals, the account is sitting at 1,433. Now listen, this isn't some flip your account series. This is real build, real risk, real strategy. Let me break down exactly what happened, why we bounced, why I'm sticking to this strategy, even if it pisses some people off. The most controversial thing about my strategy is probably our risk to reward. It's a negative risk to reward. It's not a 1 to 3. It's not a 1 to 2. It's usually like a 1 to 0.5, or sometimes even tighter than a 1 to 0.5. It's not something that I woke up one day and said, this is going to trigger people. This is what I'm going to do. It's more so, it kind of just came to me over time. I actually started out swing trading. Well, I used to be an RR demon. Like I dead ass used to have 1 to 10R, 1 to 5R, 1 to 6R. And over time, it kind of got lower and lower and lower. And I'll tell you why. Me personally, it doesn't always make sense to force an RR when price action isn't matching that RR. For instance, like if I know there's like a resistance coming up and I know that that's a strong level of resistance, I understand that that's a level that highly likely could get tapped, but once it taps, you don't know what's gonna happen after. So why would I want to risk holding past that point where I can just get out when it taps the area? And sometimes I can't just put my stop loss in the middle of nowhere. I have to put it below a certain area that makes the most sense. At what point is this going to be an invalid trade? So that's what I'm kind of asking myself when I'm getting into these trades. I'm not just like,
oh, okay, 1 to 0.20. This should be good for the clip.
That's not how I approach it, right? So over time, like that kind of just came to me. That naturally just grew on me as the strategy progressed, as the strategy improved. I did start off a positive risk to reward, and I kind of slowly kind of, became a negative RR over time. Here's the thing about it. Not a lot of traders can actually trade this way because not a lot of traders have the mental or the mindset to understand negative risk to reward. Understand that sometimes one trade can wipe out 10 trades, right? But here's the thing that a lot of those traders don't understand as well. And this is what I'm trying to teach them. It's not a set risk to reward every single day. It's not you wake up and you have to get a 1 to a 0.5R. You're not choosing the risk to reward. And that's why a lot of traders don't learn early in their career because they're used to having a fixed RR, 1 to 5, 1 to 3, 1 to 4. What about the trade? What about the fact that there's clean traffic to push up towards that area of resistance? What about those things? And that's why a lot of traders don't understand my strategy. Now, part of the strategy does involve a lot of win streaks. And this is another hump that you kind of got to get over when you're getting into the strategy. Don't force win streaks. Don't force winning trades. Every day you come to the charts, you have a strategy. How are you going to get a trade today? Or how are you not going to get a trade today? For me, it's come to my charts, mark up my zones, mark up my levels. I have ideas as to what I'm looking for. Let's say it's trade A, trade B, and trade C. These 3 trades are part of my playbook. You have to make sure it's part of your playbook. If it's not part of your playbook, then what the fuck are you taking? At what point are you going to learn to create a consistent strategy? So that's very key. If these setups form from 8 a.m. till 11 a.m. Eastern, my time, NY session, then I'm getting into a trade. I'll be very strict about them because if they come, boom, you're in there. And make sure you get in there. Don't hesitate to get in there. If it doesn't form, then you're not getting in. So that's the plan every day. Come to the charts, mark up, have a setup, have a plays. Like we have multiple plays in a day that could form. Our playbook is large now. It's like good 10, 11 trades now that we have in our playbook. And believe it or not, even though with 11 trade setups, they don't all come every day. But when they do come, we're in there, we're executing. And I'll show you guys the examples when I put on my MT5 in a second for you guys to see the 1K account growth. But this is what you want to do. That's it. That's on your mind every day. You're not here looking for,
damn, I need to make 10 wins.
Because why would you want to apply that much pressure on yourself to win, right? You have to build a strategy and build your psychology around the fact that like least pressure as much as possible on yourself. You don't have to force all of these plays, force all these setups when it's not there. Before you even think about what your win streak is, before you even think about what's your risk to reward, think about the charts. Are the charts printing what I want to see? Are the charts printing higher probable plays? If they're not, get the fuck off the charts. You're done for a day. Hop off. On to the next day, right? But you get trades A, B, C, boom, one trade. Next day, A, B, C, didn't form, you're not in. Next day, it's Wednesday now. A, B, C, you got trade B, boom, you're in, right? You want to build that consistent rhythm, consistent strategy. Like a lot of trades, they're just thinking about, what if I lose? What if I win? Like, forget the wins. Just lock into waiting for trades A, B, C, and that's it. Every day, price action. If it's valid, it's valid. And I like to do a thing every day with my DVSL1 students where we rate price action that day based off of the opportunities that it gave us and how it moved in general. It's a good habit to build too, because you get a better understanding of like, okay, you can compare these days, like, oh, this day was ass, this day was good, you know? Any data you collect is good for your trading, good for yourself in general as a trader and building that experience. So that's kind of what you want to do. And over time, you might go on streaks. You know, our last streak here was, I think, a 38-day winning streak. So roughly like almost 2 months of trading, because there's 20 trading days in a month. And that wasn't something that we planned. That wasn't something that we just said, you know, like, let's hop into the charts here, let's go on a crazy winning streak. You don't want to say it to yourself. You don't want to say, I want to go on a winning streak. I need to make this. I need to have this RR, because it's all just pressure. And that's why the negative RR strategy for me works best for myself. That's kind of why I like it, because I'm just focused on winning trades. I'm just focused on price action. I'm just focused on what price is giving me. I'm not worried about the result. The result is going to be the result. Win or loss, doesn't matter what it's going to be. But you come back the next day, you recoup yourself, wait for the same plays again. It's rinse and repeat. Short memory. If you're a trader and you don't have a short memory and you're holding on to losses, you're holding on to ideas from the past, what you're doing is you're revenge trading now, which means that you're going to think about that loss all the time. Every time you get into a trade, you're thinking,
damn, last trade I took a 15% loss. I need to make it back.
You might not realize it, but what you might do is you might hold a trade longer than you should. You might hold a trade. Let's remember how early I give that example of when price gets to this point, you want to be out because that's a resistance. You might look to say, fuck that resistance. I'm hoping that it's going to push past it. You're trading with hope now. That's the last thing that you want to do, trading with hope. But yes, our strategy, sometimes you gotta get used to the fact that one trade might wipe out a certain amount of trades. Our last trade, we took a loss for 8.86%. And that loss wiped out how many days here? 6 days of work. What, a week? You know what's gonna be crazy? Tomorrow's a new trading day. Tomorrow's a new day. Tomorrow's a new day where you can come to a chart fresh-minded and take another trade again. You don't need to force yourself to make it back today just because you want to get over this loss. Bruh, what about the wins? What about the account growth from the start till that loss? What about all the percentages you made? You're not thinking,
oh, damn, I made 50% in the last 50 days. How am I going to do that for the next 50 days?
One thing at a time, one day at a time. You might not make back the 8% today. That's what you're looking to do every day. One step at a time. Take your time with it. No rush, no pressure. Don't apply that pressure on yourself. And that's what's key. So this is part of it where a lot of traders don't like to show. We've been live for 4 or 5 years now, streaming live, showing all the wins, all the losses. So we're pretty used to that. You can see they're right here. One loss. The last loss we took on Friday, negative $139.36, which is exactly negative 8.86% on that account. A lot of people who are new to the video, new to the strategy are probably wondering, how the fuck do you bounce back from that? Why do you want to put yourself in a situation where one loss wipes out 10 trades? Now, you put it in that perspective, of course you're not going to feel good. But here's the thing. It's one trade at a time. You don't need to make it back. What about the start of the account down till the loss? By the way, another thing I want to speak about as well was on the 11th of April, I just transferred the balance from the other account to this account because this is a non-commission account. The other account had commissions and it was eating up commissions. And I'm very used to not trading on a non-commission account with Blueberry Markets. Look at the account growth till now, $1,000 balance until $1,433. After $95.87 in withdrawals. So the account should be sitting at 1,530-ish. So it's up 53%. You guys are wondering like, Don, the 8% loss, it's gonna take you a couple days to make it back. Why do you wanna apply that pressure on yourself to make it back instantly? You can just take it one day at a time. Let's say tomorrow you come to the charts. Let's say you make $9, 0.6%. Next day, you make $18. You're not thinking ahead, you're not thinking in the past, you're thinking about the current moment and what you need to do next. Over time, the account slowly makes its way back. I think the last loss that we had, we lost 21.97%. The next day we ended up making 7.69%, which is roughly 2 weeks of trading for us to make back 21%. That was probably the largest loss we had in this account since. You're just taking it day by day. And eventually that loss will come back and just like that, you'll be back on track. I'm not even thinking about that. You shouldn't be thinking about that at all. This is the account growth. You can see all the trades I've been taking. We're making like roughly on average 1% per trade. It's consistent. And that's what's key. Consistency, discipline, and patience. You can look at my entire journal right here and see all the wins here. Another key thing as well is that I've been keeping the same lot sizes since the start. We haven't changed that. And I will change that once it gets to 2K. Everything's been pretty good this year, especially after coming back from last year. A lot of me had to learn a lot and adjust a lot. But I will say right now, like this is probably the sharpest I've ever been of all time. If you look at our journal right here, this year alone, we're up 990 pips. The year prior to that, great year. Some say it was our best year. 2023, 1,242 pips. 2022, 1,748 pips. We're halfway into the year, roughly what, 1,800 pips? It might be like 2022, might be better. We'll see. Pretty good year. All that has changed this year was, I think we did get more patient. We are more disciplined waiting for our trades. We're not like looking to get a trade over with for the day. And now it's like literally there are days where we go without trades at all. It's like roughly 4 to 3 trades a week. And another thing as well is our pip count has also increased too. These are pips. So a lot of people are used to like seeing us get like 10 pips, 8 pips, 7 pips. But I think this year we've gone one sharper with our analysis, sharper with our TP. So in the past, this is what we'll do. We'll be looking for buys, right? Say it's over here. In the past, we'll be like, oh yeah, TPs could be here for runners. Like, yeah, price can get there for sure. But, before getting there, it has to break through 33, 37. There's levels on the way up that in the past we ignored, but now we're just literally moving our TP to a zone. So it could be here 17 pips, could be here 28 pips. And instead of moving stops to break even, let it run towards TP. When we want runners, what we'll do is we'll actually trail stops in profit. So by the time it comes up and it taps like a minor support resistance to say stops to break even. Step 2, let's say it passes like 33.70. Okay, cool. Trail stops 10 pips in profit. And we'll just aggressively trail stops in profit, in profit, in profit. That has helped us gain a bigger range of pip count in our trades. And just good management. Like the amount of times that we tapped TP this year has been more than ever. These are actually TP hits. In the past, like we'll get like maybe 10% of our trades where TP getting tapped, but we actually hit like TP, like I'll say 60% of the time now, which is a huge increase. So it's not only our discipline that has improved, it's just our price action has also improved as well. Just getting better with reading price. That's kind of the only thing that's changed this year and the only thing that we really improved on and adapted to this year. We're not looking to flip it $1,000 to like $1 million within the year, like it's going to take some time. This is part of the start of it, right? It's about the start. It's about how you approach the account to start off, because that's what's going to get you to the milli. Like you're not going to get to the milli by not building good habits. So when it comes to withdrawals, like we've been making every month, 30% of my profits get withdrawn per month. I keep the rest in the account to trade with. That's building a plan. That's building a strategy. And it also reminds you why you're trading, no matter how much it is. For those who are struggling with withdrawing, for those who don't know how to withdraw, when to withdraw, getting consistent, building a plan every month to withdraw a certain amount of money keeps you sharp. Keeps you looking forward to that day, and it just builds good habits, good plans. Every month you're used to it. You go from withdrawing $34 on $1,000 account to withdrawing $60, to withdrawing $100, to withdrawing $1,000, to withdrawing $5,000 to $10,000, $20,000, $30,000, $40,000, and so forth. You can't go from 0 to 100K. You're gonna lose your shit. You're not building a step-by-step plan. You're rushing it. You're thinking, this doesn't matter. I can withdraw $6 any time. Well, do it then. Because it's not about saying you can withdraw $60 every time. It's about actually withdrawing $60 to start and withdrawing the same amount each month. Think in percentages. Don't think in dollars. And that's why understand your winning percentages, understand your losing percentages, because that number doesn't change. What changes is the amount. But looking at the percentages, you won't get freaked out every month as the account grows. It doesn't matter how small your account is. It doesn't matter if your withdrawal can only get you a cheeseburger at McDonald's. Like, withdraw it, reward yourself to understand why you're trading in the first place. The more your account grows, the more things you can do with that money. But it's just about building good habits, man. That's all that's really about. This account has $95.87 in withdrawals. which is roughly 10% of the balance. So I'm going to go over a couple of trades now. This right here is Friday's loss. So you can see we took entries down here. It was a wick entry and we got out here at the end of market closure because I definitely wasn't going to hold to the weekend. And we had a stop loss, I think, set up here at 75 zones. We got in because one of the things that I've been taking a lot of trades on is the leg candle. This right here is the leg candle. It's a certain candle, but it's not just about the candle. It's the formation that it usually forms next after. So what ends up happening next is you would fill this wick up majority of the times, 95% of the time. And you guys are wondering, well, Don, why did you take sells there? So here's the thing. There's different ways to get in and out of a leg candle because this is a 4-hour leg candle, right? So it's not just going to form it within one push, or in this case it did. Usually what happens is, so this right here is the leg candle, a bearish leg candle. And this right here is a bullish leg candle. Very straightforward, just a certain type of candle, no bottom wick candle usually, barely a top wick or barely bottom wick, barely a top wick, and a huge body or a huge wick. When you have a bearish one, the next candle will usually come back up to fill the wick like this. It's about the way it forms, and that's why we got in here. So when it fills the wick, it doesn't just fill it. What it would usually do is it'll open up, and this happens maybe 85% of the time. Tap the leg candle body, which is here, right? Which is right here in this case. And this is the opening. So this is the range that's in. Just imagine this is just ranging here. So what ends up happening, the next candle opens up, it'll come up, tap the resistance. It'll pull back, and then it'll re-break the highs, and then like creating structure, right? Because it's just creating structure. This is a higher low. And then it'll just start to respect this support. Once you start seeing it respecting that support, that's when you're looking for those buys now. You can look for those buys above this high here. You are just going to be taking the re-break, and then you're looking to fill the rest of the wick up. We would usually take this type of trades, but in this case exactly, we didn't. We took this move right here, which we've also taken in the past, and we won off of that trade. But I think what got me caught up into the trade, or what went wrong, was I didn't think it would be an issue, because I usually do see it tap the resistance immediately, but you can see here. So this is the leg candle body, right? Usually what happened is you would come up, tap the body, and then reject back to the opening, the flip, and then come back above the body and respect, which it did in this case, and then continue up, right? So if it weren't for the sells there, we would have ideally gone buys, but we expected price to reject here. And I missed out on this. Now, this right here didn't actually come up to tap the body. It rejected like 14 pips prior to the body. So if this were to happen up here, I mean, yeah, we would have gotten some out of it. But since this already happened, this is now seen as a higher low. So as you come back up to re-break the highs, it was a bit riskier to take. In my head, I was like, 95% of the time, you'll come up to the body and reject off the body. Why wouldn't it come up this time around again? And that's when I went wrong, because it did reject it by a bit. Maybe 7 pip rejection, but not like an actual rejection. And when it created a low here, it came back up to re-break. That's when I got cooked. And we ended up closing here at 68. So we did manage risk pretty well. I think it was a loss for negative 172 pips, which was negative 8.86%. So it wasn't too bad of a loss. The another trade that we took was right here. We just took advantage of the retest of a low. We wait for a higher time frame to bounce off a major zone. This case, it was around 65, I think. And we'll wait for price to pull back. If it pulls back and we notice that it's not really forming any steep wicks, any higher lows, we'll then take wick entries at the next amount of resistance. In this case, I think it was 75. And taking sells there back down to retest the lows. And in this case, we closed off here at the very next amount of support. And we closed off for 25 pips in that case. 1.31% gain on that trade. Every day we come to the chart and we're doing the exact same thing. You can see our stats over here for 2025. It's mainly this year breakouts, NY session on, I'll say, the 5-minute time frame, and the 1-minute time frame has been our most used time frame. We've gone smaller on the time frames over the last year and a half. So 96% win rate on the flip and 93% win rate on the wick entries. Pineapple's 100 so far this year. On the losses that we took, there was no pineapple. In the past, man, we probably would have had a pineapple here for wick entries down. Not anymore. Now, we're very selective about our pineapples and wait for full confirmations instead of just entering around. We just get out the drawdown. That's how I've been trading the account since the start of it. If you guys want to see more of my trades, I'm trading with my group, DVS01. So if you want to be part of that group, go to wap.com/DVS and you can sign up and become a member there. You get live training room with signals, Q&A during sessions, TBJ Journal V2, Zoom calls, mindset coaching. So you get to ask questions while I'm trading / streaming in that group. You can go check this out, and the link will be down below in the description. So yeah, we took a hit, we bounced back, and we're sitting at 1.43 with withdrawals. So roughly 50% in profit on the account within 4 months. So a little above 10%, I think roughly 12, something like that. I mean, people are gonna hate on the risk to reward, but in trading, you have to just focus on yourself, focus on your strategy, focus on your own journey, your own mistakes, your pros, your cons, and not compare that to anyone else's journey. Because when you do compare yourself to other people like that, you're never really growing. You're trying to play into their role, their shoes. But how about your shoes? What situation are you in? What are you going through trading personally, mentally wise? How can you overcome that? Focus on yourself. The rest will naturally come. When you start chasing other strategies, chasing people's lifestyles, chasing things and being things that aren't you, that's when you kind of fall behind. And you don't want to do that. So again, either if you came here as a negative risk to reward hater, or you've been watching me for a long time, just support me for a long time, I appreciate you guys for showing up regardless. I am currently streaming in DVS01 every single morning. Link will be down below if you want to become a member. Basically, you come to the Zoom calls, there's no delay. You ask questions, I answer them. Could be about charts, could be about your trades, could be whatever. Send your charts, I'll review them. That's where I've been trading every morning. If I come back to YouTube one day, I mean, we'll see. I think right now the YouTube videos is my focus. If you want to become a member, click the link down below. I'll have up my screen somewhere. Everyone's just focused on trading with no delay because it's on a Zoom call, and it's been a blast since. I think this is our first blast in the group. All right, see you guys in the next morning. The rest of you guys on YouTube, I appreciate you guys as always. I'll try to drop a lot more videos. If you've been rocking with the series, you've enjoyed the series so far, I know it's only part 2, make sure you leave a like and comment down below what you want to see more of, or just talk about your own trading. Maybe talk about your issues, your struggles right now in trading. Maybe I can answer them in the next video. But that's it for now. Have a good one, everybody. I'll see you guys in the next one. Peace.